Good morning. Welcome to IG's early morning call. It's the midweek trading session, Wednesday, 17th of May. Let's take a look at the headlines as we see the Nikkei rise above 30,000 for the first time in more than a year. We're seeing Japanese GDP topping forecasts, and the Japanese economy is now no longer in recession. We're watching an all-session stock later on today. Cisco Systems reporting after the closing bell tonight on Wall Street. There's a lot of concerns about supply issues, very much under scrutiny. We saw the company report good earnings last time around, but the stock dropped. Could we see the same repeated this evening on concerns about the outlook? And the US summer driving season back in full gear as we see the oil sector shift from heating oil into driving motor fuels. And we've seen refineries stepping up production, but we've got a surplus of oil in the market. We'll see how to trade this in the next 15 minutes. Let's take a look at what's happening in volatility. Up for a second day. It's only a small rise today at 2064, but it does mean that markets are under a little bit of pressure, and that's exactly the story I want to impart today. That we got these markets on the way down. You can see yesterday we saw declines, and in fact this is pretty much across the European markets. Earlier today we saw a rise to the German DAX on the 24-hour markets. I'll take a look at that in just a minute, but the pressure is certainly building here in London. We're now down at 7722.9. A couple of companies reporting earnings, but they're very much B-list numbers. And I don't think they're necessarily going to steer the market, which is good news, really, because, in fact, the earnings aren't particularly good. But we'll take a look at those in just a couple of minutes' time. Wanted to take a look into some more detail about what's happening across the European continent. German DAX, as I said earlier today, it was up. Now, if we look at what's happening on the 24-hour markets in 30-minute candles, just want to show you where the markets closed out yesterday's session on Tuesday, 16th of May. Yesterday, that was where we closed out the trading day yesterday. And you can see now we are now underwater so far as the cash session is concerned at the top of the hour. So the advantage that the German DAX had over the rest of the European markets now has totally evaporated. And indeed, you can see this big candle down here was at 7 o'clock this morning. So a pullback in the markets, taking us down, as I say now, below the waterline. So expecting a lower start to the German DAX when things gets underway as well. And in the French CAC 40, just to tell you what else is happening there, watch out for automakers today. Of course, France has Stellantis. The German markets have BMW, have Volkswagen. And we've seen today Europe April passenger car registrations rising 16% to 964,900. I don't know whether this is an improving situation for electric vehicles or whether people are going back to using the old or demanding the old, old technology of combustion engines. But there's a 16% rise in April car passenger numbers. So in amongst the mix today, do watch out for some of these automakers, which could possibly be seen to be bucking the trend. Let's take a look at what's been happening overnight in the Asia Pacific markets. The Nikkei 225 storming past the 30,000 level. I'll take you through the detailed reasons behind that, but broadly speaking, we've seen some good GDP numbers out today. Hang Seng Stock Index down 0.9%. We've seen Chinese data out this morning showing April house prices up 0.32% month on month, but that's slower than the month of March. We've seen a lot of pressure building on the Chinese economy now, and this is beginning to make itself felt, I think, in some areas of the markets, including the Hang Seng in Hong Kong. S&P ASX 200 down almost 0.5%, as we'll see in just a couple of minutes' time, that we've got a lot of concerns about the outlook for what's happening with the metals markets, with some of the metals seeing levels not seen in a year or so. Again, we'll take a look at that as well as to what's been happening in the markets overall. US close last night. Just a quick update on what's been happening on Wall Street. The Dow Industrials down 1%. Pressure as well building across the other parts of the market. Nasdaq Composite, though, remains one of the better performers, or one of the least worst performers in yesterday's session. I want to show you what's been happening with that market, because as of the high point we saw yesterday, we saw new higher highs not seen since August 2022. And broadly speaking, despite the fact we saw a drop in yesterday's markets overall, the 24-hour markets actually did well overall for the Nasdaq. A little bit of money taken off the table at 13,446, but techs have certainly been outperforming this year. This dotted line here, this vertical dotted line, is the 1st of March this year. The beginning of this year is this blue box down here. So we've got a 26.47% rise in the overall value of the Nasdaq since the beginning of the year. Now, the Japanese economy has grown faster than expected in the first 3 months of the year, but the most important headline coming out of this is the fact that Japan is no longer in recession. Let's take a look at the numbers. We're talking here about the world's third largest economy, growing by 0.4% in the January to March quarter, faster than the 0.1% forecast, and by 1.6% year over year. All this number far exceeding the market forecast for 0.7% gain for the quarter. This is the first rise in 3 quarters in a row, as the previous quarter was revised to a 0.1% contraction, down from a 0.1% expansion, meaning that the Japanese economy fell into a technical recession for the 3 months. This data was underpinned by a rise in domestic demand after the removal of COVID curbs, but global headwinds remain. Economists still expecting a moderate economic recovery as mounting signs for slowdown in US, European and Chinese economic growth could cloud the outlook for this export-reliant economy, which is what the Japanese economy is known for. Private consumption, which makes up more than half of the economy, grew 0.6%, beating forecasts of a 0.4% increase. Let's take a look at what's been happening with the Japanese yen. This is the dollar rising against the yen, so it's a weaker Japanese yen. We're just bumping up against this red line here, which is the 200-day moving average. The line up here at 137.92 for the highs we had back on the 8th of March. This is now a little mini rally that's underway. And if we draw a Fibonacci from the highs there down to the lows, you can see we're absolutely on the 76.4% retracement, which, as I say, coincides pretty much that 200-day moving average. Now, what happens from here on? If you get a candle close beyond this level here, then we're on for a total retracement on the way to 137.77. Now, capital expenditure also surprised the markets. Let me just take a look at what's been happening with the Nikkei 225. You can see big gains there. Capital expenditure surprised, expanding 0.9%, confounding forecasts for a 0.4% fall. But exports, which fell 4.2%, marking the first decline in 6 quarters. External demand, or net exports, shaving 0.3 percentage points off GDP. But the broad sweep of the news is that it's good news for the Nikkei. And indeed, we saw this 30,000 level breached in today's session for the first time. We've seen that up there since the 28th of September 2021. So big gains for the Nikkei on this news out today on the economic front in Japan. Now let's move on to some of the corporates. As I said, we're talking B list here, and I want to begin with B Land to begin with, which is British Land, which we've seen some data out this morning, reporting a drop in its property valuations for the period as elevated levels of interest rates and broader economic worries dented sentiment in the commercial real estate sector. Let's take a look at the figures. Net tangible assets. This is one of the measures, a key measure that reflects the value of the company's buildings, fell 19.5% to 588 pence as of March the 31st. Property firm posting a net income of £283,000. Upward yield pressure appears to be easing, according to the statement this morning, in the retail sector particularly. Let's take a look at the British Land share price. We do have some support below where we are. If you think, like me, that these numbers are not particularly good or not necessarily good enough to sustain the 2 days of gains that we've seen, 377.4 is where this stock will open this morning. If you are short on this, your stop would go in this area up here at around about the 390 pence level. 358 would be your price target if you're short on this. Do read this, the report this morning. It's very difficult to read it on first glance to work out just where this is going, but I don't think necessarily we see anything that's massively positive in this statement this morning. I want to stay on the charts because I want to quickly run through some of the other companies worth looking at. We've seen a rise recently on Sage Group, the accounting software company, which is listed here in London, to 826 pence. The stock will open at 820 today. Underlying profit up 14% to 227 million pounds. Organic revenue just over £1 billion. EBITDA margin 25.2%. I think broadly speaking, these are pretty good numbers. If you get a breach, we're opening at 820. If you get a breach to the 826 pence level, you're then on the way to levels not seen since the 6th of January. Again, if you're long on this, your stop goes below the £8 level with a view to taking it higher. Again, look at the numbers because, again, it's very difficult to work out precisely the underlying message that I can see here. At the moment, at least, what I've seen looks positive. We'll have to see how things open at the top of the hour. Let's take a look at what's happening in Germany with Siemens, the industrial conglomerate, raising its full-year sales and profit forecast for a second time this year. Let's take a look at those figures. The group posting this morning better than expected revenue, up 14% to 19.42 billion. Industrial profit in the first 3 months of the year rising a whopping 47% to 2.6 billion euros. But that missed forecasts of a very, very bullish 2.7 billion that analysts had been penciling in. So there may not necessarily be any particular big upside to any move on the Siemens stock this morning. German conglomerate now expects comparable revenue growth of between 9 and 11% in the 12 months through to the end of September. Now that's good because up from the previous view of an increase to 7 to 10%. So 9 to 11% is better than expected. Also expects to increase its underlying basic earnings per share to a range of between 960 to 990. We have been looking for 890 to 940. Let's take a look at the share price chart. The only thing I'd say is quite often when I'm looking at share prices bumping on a very close to any particular level of either support or resistance, that I'm wondering whether perhaps maybe the sort of hawkish, bullish numbers have already been priced in. 149.79 is where this stock will open. If you're long on this, your stop would go below the 146 level, which is below the green line here, which is the 50-period moving average. Not a particularly close, it is a very close price target of 152.20, which were the highs we had back on the 9th of February. If you do get a breach of that level, we're then on to lowers the stock not seen since January 2022. So Siemens already having bagged some decent upside so far this year. Is there any more gas in the tank to take us beyond this line of resistance, despite the fact we got these good full year numbers out from Siemens this morning? It could well be a little bit of an uphill struggle to get us past that line of resistance. Staying in Germany, looking at Munich Re, the world's largest reinsurance company, reporting a 14% drop in net profit in the first quarter, dragged down by claims related to the earthquake in Turkey. Net profit falling to €1.25 billion from the 1.48 billion this time last year. The reinsurer remaining confident about meeting its full year targets. This stock is another one that trades on the German DAX. Yesterday, we saw it disappear below the 100-period moving average for the first time since March this year, down at €322.35. Downward pressure continuing. And also this news today may not necessarily add any upside to the share price because of the concerns about the amount of money that's been taken out because of the payment for insurance claims for that event, that tragic event in Turkey. Again, staying in Germany, Commerzbank coming out with figures this morning. Net profit nearly doubling in the first quarter to €580 million, helped, like many banks this quarter, by higher interest rates. Interest rate margins are really playing into the favour of these big banks. Now, this is better than the €481 million anticipated by the market. This stock will open at 987. You can see we've seen a little bit of uptick recently, down as of yesterday's close. Again, another stock worth looking at today. If you're long at 987, the stock goes below the 950 level with a view to taking that higher. But again, read the report. Another one worth watching this morning, let's just swap this on to SAP, the German software house, which is going to be of interest this morning. Late last night, after the bell, the company raised its 2025 total revenue outlook for continuing operations by around 4 billion to 37.5 billion euros. SAP sees cloud revenue above 21.5 billion. It now sees non-IFRS operating profit around 11.5 billion euros. Now, this is all very positive. As I said, it came out after the bell last night. So whilst we saw a little bit of a rise yesterday, there was no evidence, there was no move in this stock during the cash session yesterday in response to this. The company also says it's to buy back up to 5 billion euros worth of shares starting in the second half of 2023. So another positive, potentially positive, good stock story in the German markets today. 121.40 is where that stock will open. If you're long on this, stock goes below the 120 level. Cisco Systems is due to report after the closing bell on Wall Street tonight. Analysts anticipating earnings of 97 cents a share, 10 cents higher than the same quarter last year. Revenue also forecast to reach $14.4 billion a year ago. That came in at $12.84 billion. So that's looking particularly good for the start of the earnings out tonight. This stock is an all-session stock on the IG platform. It'll open at 9 o'clock this morning UK time. Since Cisco's last report 3 months ago, shares have lost ground In February, the networking giant posted better than expected earnings and revenue, raising its full-year guidance, but its backlog increased as component supply remained an issue. Last week, Cisco announced a significant investment in India, hoping that its new manufacturing operation will support demand in India and also globally. Cisco aims to drive over $1 billion in combined exports and domestic production over the next few years. Cisco has been present in India since 1995. The country is the group's largest R&D centre outside of the US. And of course, we've been hearing a lot more about what's happening in India with the likes of Apple moving a lot of its manufacture there as well. So India playing a big part in Cisco systems. There's a growing surplus of oil around at the moment, with the latest evidence coming through from the American Petroleum Institute reporting another rise in crude oil stocks. So take a look at how to trade this in just a minute. Crude inventories increasing by 3.7 million barrels last week, while gasoline and distillate inventories falling by 2.5 million and 900,000 respectively. Refineries have been running above 90% for the past few weeks as fuel demand remains high, but motor fuel stocks remaining below their 5-year averages. 7% below gasoline inventories, 16% below for distillates, according to the investment firm Tudor Pickering Holt and Company. Now, analysts expect US oil refiners aims to run up to 94% of total processing capacity this quarter, driven in part by expectations of seasonal travel demand. This compares to 91.3% refinery utilization during the same quarter last year, and a 71.5% and 87.8% run rates in 2020 and 2021. Now, all this could end up being negative for the price of oil. Now, in the long term, you'll see we've seen some big declines from the highs we had back on the 8th of March 2022, all the way up at $124.71. Here we are now at $70.35. This is for US crude. And this downward pressure, I suspect, could well persist at $70 if you're short on that. Your stop would go in this area up here, just above recent highs at around about the $74 level. Your price target for the lows we had there back on the 24th of August 2021 at 61.55. Let's move on, take a quick look at what else is happening. I want to bring you a quick update as well on what's going on. If I can just quickly return to British Land, I want to take a look once again at this chart. There's been a little bit of an update on the British Land headlines. The news that we've got an adjusted net income of £264 million. Now, we said earlier this is 283 million by Reuters. That was incorrect. So I just wanted to clarify this, going back to what I was talking about earlier at British Land. And I think that, if anything, builds a continuation of this slightly, I won't say negative picture, but there is obviously a big improvement. 264 million against 280,000. I beg your pardon. So this is an adjusted net income far in excess of what I was talking about earlier. So just to correct myself on the British Land story, I was talking about the negative effects of the difficulties that are within the British economy. And British Land does highlight the issues, not just economically, but also politically. But that adjusted net income is far stronger than I reported earlier. So we'll have to see how British Land opens, but adjusted net income of £264 million. Let's stay on the charts. Just quickly update you on a couple of other areas of the market. Gold is little changed on from the losses that we saw yesterday. But for me, the big news is around some of these base metals. Yesterday, and indeed today as well, we saw a new lower low print for the year for the price of copper, down at levels not seen since the 30th of November 2022. I was talking earlier, was it late last week, we were talking about this line of 84.42 to break. We're now 81.52. The next line of support to watch out for the price of copper is down here at 78.49, 7,849 per ton for copper. And this is a trend I wouldn't really want to get in the way of. Just because it's lifted today doesn't necessarily think there's necessarily sort of recovery story here. And it's really all about what's happening in the second quarter for Chinese demand particularly, but global demand generally, and concerns about the potential for recession for many of these major economies, meaning that some of the copper prices could continue to drop. Zinc, same sort of situation. In fact, if anything, slightly worse. We're very close to a level not seen since October 2020. Same sort of story. If you're short on any of these markets, put your stop above recent price action with a view to taking that on the way down. That's it. We've got about 10 minutes to go before the start of today's European session. Do watch out for British land at the start of today's trade as we see the markets regroup at the top of the hour after the release of earnings from British land and also Sage Group here in the UK. But for me, some of the bigger and better stories coming out of the German markets, such as Munich Re and Siemens, two stocks potentially that could well help to lift the German DAX. Certainly the DAX was one of the better performers earlier on the 24-hour trading sessions on the IG platform. That has now turned negative, but I think if anything, we could well see a little bit of an outperformance, relatively speaking, to some of the other European markets as we wait the start of the top of the hour. I'll be back at 10:30 with Charting the Markets with Patricia Elbers from Financial Trends, taking a look at some of her charts as she trades these markets as we see things tread sideways for the last couple of weeks. Are we going to get some sort of firm direction coming out of the next few weeks as we see Patricia give her views on some of the technical analysis in Charting the Markets at 10:30.